Hi everyone. Today we are going to discuss a very important topic, money market. So what do you mean by money market? Money market is a market where short-term instruments that mature in a year or earlier are traded. Money market is a market for short-term financial assets which are near substitutes for money. So what do you mean by call money market? Call money market is the part of the national money market where the day-to-day surplus funds, mostly of banks, are traded in. So as these loans are repayable on demand and at the option of either the lender or the borrower, they are highly liquid, their liquidity being exceeded only by cash. The nature of call money market in different countries varies from each other. So there are three types of money market: call money, notice money, term money. So if we take it as a call money, we are going to doing the transaction within a one day only. For example, the bank will get morning, the settlement will be done in that evening itself. So it will take one day only. That's only we are saying it's a call money. Notice money, it will take 1 to 14 days. That is notice money. Term money, more than 14 days. So it's a term money. So what are the types of call money market? There are two types of call money market: organized market, unorganized market. There is some structure, it's a organized market. There is no structure in that unorganized market. So what are the things in that organized market? Call and notice money market, treasury bill market, commercial bills, certificate of deposits, commercial papers, money market mutual funds. So these are all structure under the government control also. Unorganized market, indigenous bankers, money lenders. So what are the functions of call money market? Liquidity management. One of the primary function of the call money market is to assist financial institutions, especially banks, in managing their short-term liquidity needs. So what do you mean by liquidity? The easily converted into cash. It's a liquidity. Institutions can borrow funds on a short-term basis to cover temporary shortage or lend excess funds to earn interest. Interest rate discovery. The call money market plays a crucial role in the discovery of short-term interest rates. Interest rates in this market are highly sensitive to changes in the overall liquidity conditions, reflecting the supply and demand for funds in the short term. Monetary policy implementation. So we everyone know about that RBI. So the control of monetary by the RBI, Reserve Bank of India. So central banks use the call money market as a tool for implementing monetary policy by influencing short-term interest rates in this market. So central bank is a crucial part of monetary policy implementation. Arbitrage opportunities. Traders and financial institutions often engage in arbitrage in the call money market. They may borrow funds at lower rates in this market and invest in higher yielding assets, taking advantage of temporary interest rate differentials. Interbank transaction. So what do you mean by interbank transaction? Everyone know about that. That is a bank to bank. That is interbank transaction. So the call money market facilitates interbank transactions, allowing banks to lend to or borrow from each other. Risk management. So everyone know. So risk is very high. So how to manage? So finance institutions use the call money market to manage their liquidity risk. So by participating in this market, banks can quickly address short-term funding gaps or surpluses, reducing the likelihood of financial instability. Benchmark for short-term rates. So everyone know about the what I mean by benchmark. Benchmark is nothing but standards. The interest rates determined in the call money market often serve as benchmark for other short-term interest rates in the financial system. Facilitates trade settlements. The call money market provides a platform for institutions to settle trades and transactions. It ensures that financial institutions have the necessary liquidity to meet their settlement obligations promptly. promotes efficient capital allocation, and finally, crisis management. So, in times of financial stress or crisis, the call money market will be helpful to. Immediately, we're going to take a situation, or immediately depends on the situation. You have to avoid disruptions in financial market. Thank you. Thank you all.